Hey, happy Sunday, my YouTube followers. We're going to do the weekly market review. But first, I wanted to talk a little bit about the S&P and that's why we're looking at a daily chart. Typically start off with weeklies because that's where I really enjoy starting because it's going to give you a bigger view of exactly what's going on and it removes a lot of the noise. But something particular happened on Monday. So as you can see here, this is Friday, and that was options expiration. So what happened there, if you don't know, and if you don't follow these types of things, I highly recommend it. I always put this in my videos, but there will be a couple links in the description below about the products that I use. I have two products that I really enjoy, Spot Gamma and Trading Ball. So highly recommend that you take a look at both of those services. And they speak about basically options and how they impact the markets. And this was a great example of it. So you'll hear me talk about call walls and put walls. The call wall it moved a little bit to the 3750s on the S&P or 375 on the SPY, but it really didn't build too much. So it didn't move too much, which means that people weren't looking for higher prices. And with option expiration, a lot of those options, call options, are going to roll off. You'll hear them talk about gamma. So that gamma exposure rolls off on that Friday, and a ton of gamma rolled off. And as you can see on Monday, this is what happens when that gamma rolls off. The market makers no longer need to hold stock to hedge the gamma exposure. So they are net sellers. And when large gamma rolls off, you are going to have large outflows from the market. And that was a perfect example Monday. You can go back and look at my previous video. I spoke about it a little bit, how that call wall really wasn't building higher. And you had a little bit of risk as well when you look at the volatility signal. It was signaling that vol was picking up. And again, it played out as it said it would. Great example of how gamma works with large gamma exposures. So if you're not paying attention to these types of flows, highly recommend that you do because they have large impacts on the market, and it will help you manage your positions, add to them, or trim some of them, or completely get out of the market if volatility breaks out to the upside. So just wanted to point that out real quick, and let's jump into the weeklies. So as you can see, kind of a wide range that was set on that Monday, and then it's settled in. It's within the previous week, except this little overshoot. You didn't see a breakdown. You just kind of saw some general liquidation, but nothing dramatic. The vol trigger on Friday that I utilized went from long vol back to short vol. So it looks like bulls are still in control. The buyers are still there. Until that changes, you just want to manage your positions, add to them on dips, and continue to let this trending market pay you. So not much going on. Plus it was a short week and lighter volumes. So not too much changed. So let's run down. We'll go through some of my lists that I'm watching. Love this play, Cameco. It is play on uranium. We are long a small position, a feelers position on the weekly. It's breaking out, a little consolidation inside the previous week. No big deal. Great volume down here in the bottom, as you can see. So there's tons of participation, which is great. So we are long this, happy to be long this. I would add to this on pullbacks if they give me the opportunity. FANG, it has nothing to do with the tech stocks, but it is oil and gas. Love it, own it as equity, not as options. On the weekly, it broke the trend. So I'm a little concerned, not dramatically concerned, but just want to see this push higher this week or next week. So want that to continue to move up. If it moves down, I'll wait to add to it, probably somewhere around the $41 range. Emerging markets, this one's going to be fantastic. Just waiting for an entry. So this is definitely something you guys should all keep an eye on, especially if the dollar, which we'll get to, continues to break down. So if the dollar continues to trend sideways to down, then emerging markets are going to be a great place to put your money. They will trend extremely well. So something to keep an eye on, I would think, for 2021, 2022, 2023, especially if they keep doing stimulus and printing dollars. that should put weight on the dollar to continue to move lower, which again is just going to feed this emerging market trend. Overstock had a little bit of a pullback on the day for the week, and it's just inside the previous week's kind of consolidating. So this thing is winding up, and it's going to break eventually. So most market or all markets, basically they auction back and forth, they're in balance, and then they go to price discovery, whether up or down, and then they find a new place where it will auction back and forth more in balance. So what you're seeing here is nothing more than it's just trading back and forth. This is just a lot of noise. And we're looking for a trend. For me, I'm long. So we're looking for a trend to move back up. The back story for Overstock is fantastic. Rumor is they're looking to get a footprint, like a physical footprint. So they might make an acquisition, some type of retailer. Datadog starting to trend, looks great, waiting for a pullback. We'll jump back in this one. I got shook out because it was kind of stuck in the mud back in late November, and I wound up just booking a small profit, and I did it too soon. So it is what it is, man. So wait for a pullback and look to add. Let's see. I have Camping World. Love Camping World. I'm actually in the real estate business, so understand RV parks and mobile home parks pretty well. And RV parks are absolutely jammed full all the time, and people enjoy them. They use them. Boomers love them as well. They offer a very cheap place to live. And if you're paying attention to the news and the economic cycles and the disparity between the haves and have-nots, RVs offer a great place or a great alternative to a house. For 10 grand, you can have a place to live. 200, 300 bucks a month, you pay to park it. Very affordable. Plus, if you're mobile or you have mobility, meaning you like to move around, you don't like to stay in one place, or if you work online or work remote, RVs offer a great opportunity for those types of people. Low overhead, low expense. I know it sounds kind of crazy if you're old, you would live in an RV, but it seems to be becoming more and more prevalent just by looking at the RV parks that are completely and absolutely full. TDoc, telehealth, this is basically, it's just telehealth. I use it myself when I work with my doctor. Great opportunity to get long this software company in the future. I just wait a little bit on a pullback, and you have a little bit of competition if it comes true that Amazon is going to get into space. So this could have some risk to it if Amazon comes in and competes heavily. If not, then this will continue, I think, to do well over time. Palantir, we have a small position in Palantir, by the way. Not doing anything wrong. We continue to stay long. There's really nothing to do. Again, going back to gamma exposure and volatility trigger, if the vol trigger says you want to be short vol, then you want to be long stocks. And if you don't understand volatility, I'm not an expert, but basically everything is volatility. If you're long a stock, you are short vol, basically. And if you are short stocks, you are long vol, or you can just be long or short vol. But understand everything that you're doing in the market is volatility based. It has nothing to do with indicators, levels, or trend lines. So if you haven't studied vol and how assets kind of react to up and down moves, then I highly recommend that you start educating yourself on volatility, which means stocks or equities in general can pull back and vol can basically stay unchanged. You see red on the screen, but it's nothing to worry about. It's just a natural auction. If vol isn't picking up, then you want to buy that pullback. If vol is picking up tremendously and then it's going to go into different buckets, then the bucket is basically a range on the VIX, a predetermined range. Then you really don't want to start buying those dips, because those dips are more than likely going to be continually sold. So always start with vol. Don't start with an indicator, a trend line, or a level. It will give you more context around your indicator, your trend line, or the level that you're looking at. Energy, still love it. Pullback on the weekly, which is I think it's very understood, or it's okay. Basically, this thing traded somewhere in the high 20s about a month ago. And then now you're looking at what somewhere around 40, so almost not 100 bagger, but what is that? Somewhere around 20, like 50%. So it's very natural for this thing to take a breather, which I think it's doing. Materials, great, consolidating. It's been consolidating. Keep in mind, I love these big weekly on the breakout here. And then as you can see, it moves up and it just keeps consolidating underneath the number. Love it when they consolidate underneath the number. Don't like it when they consolidate over the number because they have a tendency to trap a whole bunch of longs and then break. So this has a higher tendency of breaking to the upside. Again, they're battling it out. It's just auctioning back. Just be patient. But when this break comes, the more weekly bars that you line up, then the bigger the move is going to come from it. Japan, continue to love it. I think it's a great trade for the long term. And I'll continue to own it. I own it in equity, and I trade long dated options on it as well. Consolidation inside the bar, nothing here. You had a little bit of a breakout, but a bump. But that was, you had a holiday week, wouldn't put too much weight into it. Nothing wrong with it consolidating for maybe another week or two, and then hopefully it'll continue its trend. Exxon, very similar to the XLE, a little bit stronger than the ETF of XLE, as you noticed. So I like Exxon, continue to like it. I like it all the way up to 55, 60s. You could even argue that it could get all the way back up to 70s, which is basically where it dumped on the COVID news. So great trade. We own these. We're long call options on these long dated calls, leaps. So it gives us plenty of time to be right, or it gives us plenty of flexibility to move around the position. Digital metal, desktop metal. Love this one for the, I just like 3D printing, so it has my interest, and really like this one. Don't have a ton of information on it. It had a huge move. I'm not an expert on the move other than it was a SPAC. You have to look that up, SPAC, and then they changed it over to DM for desktop metal, changes the name, and with that, there's a conversion. The conversion I heard went poorly, caused lots of issues, so you have this gigantic spike in price because you couldn't get shares. Don't totally understand it. Only thing I know is waited for it to pull back. We bought it around that 16, 17 level and continue to hold. Not a huge position because I don't like these types of charts with these gigantic moves, with these gigantic tails. You want this to settle down, auction back and forth, create a base similar to this. So you have a move up and then you have a move down and then it tightens real tight and then the move starts again. This is kind of what I'm looking for, something like this that's going to happen to the right of these bars. Next up, Freeport-McMoRan. This thing's been an absolute monster. Like it, just doesn't give you a lot of entries to get in it. So just going to be patient on this one, but continue to like it. Other than that, let's see, MasterCard, kind of stuck in the mud, consolidating. This will probably resolve higher. People love this stock. It's a great stock to be in because it just absolutely prints money. But again, auctioning back and forth for weeks now will probably resolve higher. Visa is basically the same. They kind of trade in lockstep. Visa has more air above it to new highs. MasterCard has to go through a little bit more of overhead to get there. So Visa actually might be the better play on the long side. It'll probably have less overhead supply to burn through. Let's take a look at, I always like to look at bonds because you never know. And with bonds, typically when they're rising or continue to rise, it typically means that the market is starting to fear the some type of pullback or something going on in the equity market. So they hide out in bonds. TLT, they love hiding out into, but not much here. Rates continue to go higher, which basically means TLT will go lower. But you do have this base here that's been tested multiple times and it's testing it again. We will see if it breaks, which basically means rates will break out, or if it's going to base and then again move higher. Rates might have to go lower if the economy does not pick up next year, which you would see that in the TLT. Silver, great. It's a great trade against the dollar. It goes back to the emerging markets. Silver wants to go higher. Dollar is weak. So silver is a great hedge or a great play. It's kind of like the anti-dollar play. Plus you get tons of beta out of it. It loves to move. No position, but watching it. Gold, similar move, but it's not as strong as silver, as you notice, because of rates. So silver is probably the better trade here. Gold on the back half of next year probably works extremely well, but it's going to just take a little bit of time. Security software, Okta, thing's a monster. It doesn't really give you a chance to buy it when it pulls on pullback, so they're very rare. So you really need to be watching it so that when the pullback happens, you're just going to have to take advantage of it. Like the stock, but no position. And I think that's pretty much it for the weeklies. Let's drop down into the dailies. Not much here. Same thing, Okta, we just switched over. Just multiple days inside of a single day. And we're just going to wait and see how it resolves. Not much to do. Again, patience pays in this business. There's no reason. If there's nothing to do, there's nothing to do. Just find a hobby or something else to occupy your time. The worst thing you can do is go to the market looking for entertainment or activity. That's typically when you lose all your money. So we're going to start back from the beginning. So Cameco, fantastic on a daily. Big break. You had a one move, you had a second move, and then you have a pullback. So I'm guessing a third move is coming. Typically when something trends, it's somewhere around three moves up, and then it typically has a 2 point pullback, meaning that it will sell off once, bounce, sell off twice, and then it will typically resume trend if the trend is strong. So I'm looking for a third push higher, which I think we're starting to get. As you can see, you have some indecision bars, and then here we are trying to resume trend, but we basically need to put in a higher high. Diamondback Energy, FANG, saw that pullback right here. You saw a big break, and then you have a tight inside day, which basically means the selling has stopped, or nobody really wants to sell at a lower price. And now we're starting to move back up, which gives me hope. Weekly doesn't look as good, but on the daily, this looks promising. Emerging markets, sideways consolidation, not doing much. I think patience here. Overstock pulls back again. So you got some sideways consolidation on the base. You want to see this thing base, and then you want to see it start to turn up. If we can we already have a decent base, but if this can start to just turn up slowly, really tight days, this can really get going again. I think back up into that 85-90 range. If not, it will test all-time highs again. Datadog, these are a growth name, software company. Not much to say here, not doing much, nothing to, multiple days that overlap. Let it do what it does. It'll consolidate the move, and then more than likely it'll break higher. Camping World, same thing, putting in a base, pretty strong base too if you look at it. You know, it hit it again, it broke it again. It was complete nonsense. This was a gigantic buying opportunity. Now what we want to see is this low hold, higher low, and then put in a higher high, move right back up into like that 35 range. Probably does a little bit of pullback. You know, it's going to auction back and forth. That's what we're looking for. And then we want to see this hopefully push back up into the recent highs. We are long this, if you didn't know. Doc, same thing, or not same thing, but trying to put in a base. Got shagged on the Amazon news, but they bought it, and they bought it with both hands. Palantir. This one's crazy if you think about it. We have a position. We started our position back here in this 10 to 12 range, ran it up, took some off, had a kind of a nasty pullback, but they bought it. They wanted to own it. It continues to trade sideways. It's basing. It's consolidating this gigantic move. It's doing everything right. There's nothing. I don't see any warning signs or any reason why to exit the last portion of the position. Just continue to hold. Energy ETF. Underneath the 20-day, kind of rolling over a little bit, but I said that the XLE was a little weaker, but it has had a gigantic move. Hopefully it will hold this base auction. We want to get back up over the 40. Back up over the 40, we're in business. If this starts breaking down, I'll buy 1 to 2 pullbacks. But if we can't get back up over that 40, then energy might be dead for a while. Materials, again, big base. That's all you need to remember. Big base, holding the 20-day. That's all it is. Waiting for it to break up over this like 72 halves. 72 halves, and this thing will run again, which is fantastic. We are long call options on XLB. Japan, I love Japan. I keep saying this, probably say this for the next 2 years, but I'm sure it'll get old over time, but who cares? Again, got shagged because the gamma rolls off, nothing to worry about, pulls right back into the 20-day. Again, if you pay attention to the vol and the gamma, these types of sell-offs won't bother you anymore. So again, can't recommend them enough. We're moving back up. We want to get back up over that 66 half. And then again, we have tons of air up above, and this will continue to run. Exxon, see how Exxon's holding the 20? XLE was underneath. So what we want to see is we want to see a nice bounce off of this, and then again, back up over this sell bar. That's what we're looking for. And then I think we can get 40, this little swing here, the 45s, but really what we're looking for is to get up over this 52.35s right here is what we want to get up and over. And once we get up and over that, that should be a pretty easy, it should move. Desktop metal, again, pretty crazy chart. You just have to have patience and you just size them correctly. So you have a big thrust and then you have an inside day, but the thrust up is on declining volume, as you can tell. Let's see how it resolves. Hopefully it just auctions back and forth and digest this entire move. Again, very similar to like an overstock, very similar to like a Palantir. You just want to see it put in a nice base with like tight daily ranges, which basically means the vol in the stock is compressing. And when vol compresses in a stock, they like to trend. When vol expands in a stock, they like to break down. Next up, Freeport, probably just sideways action. As you can tell, just very tight ranges. It's digesting this move, and this is very healthy. It's holding the 20-day. What you want to see is this thing to start to turn up again and then off to new highs. Tip, if you guys are playing any of the inflation trades, which I am, tip continues to push higher, digesting this pretty decent move. And we will see if it can continue to put in more highs, which I suspect it will. Visa, sideways action, basing underneath the 20-day, don't really like, but it's not a huge problem with them. Visa, MasterCard, kind of say, I'm sorry, MasterCard, same thing, big thrust, sideways action. With MasterCard, as you can see, you got some overhead here. So this, you're gonna have to get through. Visa doesn't have it as much. So again, Visa probably a better play for the long side. LT continues just to bounce around off of this 155 range. Nothing to do here. I haven't seen much. It's somewhat constructive. Maybe it goes back up to that 160. Don't know, no position. Kind of on the sidelines with TLT. No interest at this time, but I still watch it. It's good to watch bonds. If you're not watching bonds, highly recommend that you start paying attention to bonds. They give great tells, and they are great trades when the markets get highly volatile. They're an easier trade. Silver looks great, digesting the move. Again, it's a play on the dollar. Kind of repeating myself, but you know, it's all pretty much the same. Gold, kind of the same thing. I just think gold, first half of next year, I don't know, I'm not a believer yet. I just think it's got some overhead, it's got some issues. But I think patience pays with gold. Love gold, would own gold. Just don't think on the first half. I think growth and value is going to be the play. I think that's where the liquidity is going to go. I don't know if they're just going to plow into gold again. I don't see it. Could be utterly wrong, but I don't see it. That's okay. No position. You can't trade them all. Can't get them all right. find the ones that work best for you and stick with those. With, I don't think I can get Ethereum or Bitcoin on, I use Thinkorswim. So, but I want to speak to them. ETH looks fantastic, and so does Bitcoin. If you guys own them, there's nothing to do except hold. Highly recommend just holding. I think this will play out for about another 8 to 9, maybe 12 months. Risk, they got some regulation on stable coins coming. The regulation looks really crappy and poorly done. However, there's some people talking about the stablecoin market is becoming so large that it could offer some instability if you have some bad actors in that field, which more than likely you do. For stablecoins, if you haven't researched them, I own them. I own the Gemini US dollar, the GUSD. It's off the Gemini exchange, which is owned by the Winklevoss twins. I'm comfortable with them, but some of the other ones I definitely would not touch. I just own the Gemini. And then what I do is, with all my extra cash, I park my money at BlockFi. With BlockFi, you move the Gemini dollar over, and BlockFi will pay you 8% on your cash, which is it's just insane. When you consider that you get nothing at the banks and you get a little bit at your broker dealer. So highly recommend, if you haven't thought about that, definitely take a look at it. And if you guys have questions about it, how to set it up, or my opinion of it, always happy to educate. So feel free to reach out. I think that's it for this week. I'll try to get some trade reviews in. I got a slow week coming next week, so we'll break down. We had some really good trades with XLB, Exxon. XLB is the materials ETF. Exxon, XOM, XLE is the energy ETF. I'll break those down for you on exactly why we put them on, the thought process behind how we use leaps or long dated call options. And that's going to be it. Wish you guys the best. Hope you guys had a great holiday, and I will see you in the markets.